Hi there, Serial Trader here. Just want to do a quick update on SPX and also the NASDAQ, so NDX. And my weekends are going to be pretty busy here for quite a while. So I'll just thought I'd get a little update while I'm thinking about it here. And okay, so we still have the potential that we completed this larger correction from our January high to our May 20th low here on SPX. And so far off that low, we do have what I would consider a pretty good 5-wave move, and now potentially a 3-wave correction to that 5-wave move. So just bear with me. I'll go to the NASDAQ. You can see basically the same situation. Now we'll focus in on the S&P first. And what time frame should I look at here? Maybe the hourly, 4-hour. Okay, 4 hours decent here. So the way I would count this off the bottom, so I think we had the initial, we'll say 1, 2, 3, 4, and 5. Okay. So 5 non-overlapping waves up. I can definitely easily count that. And from that 5 non-overlapping waves up, so far this looks like a corrective structure. And there's different ways we can label the corrective structure here. Let's go to the 1 hour. Maybe 3 down, 3 up, 5 down, maybe a flat. Okay, so maybe an ABC flat. Not to get too fancy here on the short-term time frame, but something like this. Okay, and if you just head back to the 4 hour, now you can see where I'm going with this. So potentially for a larger 1, larger 2, and then we finally are going to start a trend establishing move up that'll take us to new highs eventually. Don't know yet, but this is the kind of setup you'd want to see forming to precede that. Now, what do we have for a fib retracement here on SPX? So I'd say we're probably close to the 50% retracement. And yeah, so if we dip down a little bit more tomorrow, we get to that 50% retracement. Right now we're just sitting between the 50% and the 38.2% retracement. I'll take away that 382 since we already took it out. And back to the hourly chart there. Also a relationship. So maybe A, B, we can do a relationship of that for the C wave of the flat. We could go something like this. And it looks like we're getting close to that 1618. So usually the C wave in a flat is pretty aggressive. So let's leave that up there. Now, okay. The opportunity here is that, okay, this is going to basically be the first significant high or low since we made our low of May 20th. Assuming that we do make a higher low and we don't take out those lows. So far, I think that looks reasonably promising. So this is kind of the first entry setup since we were over here. So you got the initial 5-wave move off the bottom. We've had some consolidation off the top. That 3-wave correction you would want to see. Doesn't mean we're done that 3-wave correction, but we're right getting into the zone, the 50%, the 618. We're getting right into that area where if you're interested in trying to go long, just the market in general, this is kind of the area where you want to take your shot, and obviously your stop is below the May 20th low, because that's a must-hold level at this point for any kind of significant upside to occur before going much lower first, right? Now, this could also be 5 up, 3 down, just for a larger ABC sequence, okay? That is definitely also a possibility. So we could be 5 up for A, 3 down for B, do another 5 up for C. Maybe still be in, on the daily chart, maybe still be in just a larger ABC up for an X wave of a still developing, complex correction that's going to go lower. Don't know that yet, but that's why we focus on these shorter term patterns. Because when you got a 5 and a 3, you're expecting another 5 in that direction. And whether it becomes a trending, significant move up, or if it's just a C wave and turns back down, there's no way of knowing that ahead of time. But the edge is really 5 up, 3 down, looking for the next 5 up, stop below the prior origin of that initial 5 up. That's where the edge is had, if there is one to be had. And in this case, it looks like there is. When the pattern is not clear, there is no real edge at all. Okay, so that's SPX. Now the NASDAQ, basically the same idea. Now if we go on the 4-hour of the NASDAQ, I actually kind of like the pattern even more than the S&P. Well, not more, but it's more pleasing to me, and I'll explain why. So NASDAQ, same idea. It looks like we have the initial makings of a 5-wave move off the bottom. Okay, so 5 non-overlapping waves up. First impulse wave up. That looks fine. Now, if we go on the hourly chart for the NASDAQ, yeah, we'll do that. I think the subdivisions are a little different on the NASDAQ, a little more pleasing. So I would say you got A down, and then you had an A, B, C, D, E. So triangle B, contracting triangle B, or actually it was a running triangle wave B, and then another move down in C. And I don't want to normally go into the smaller time frames here, but just to show you the subdivisions of this running triangle B, I will label the triangle there. So let's do that. A, B, C, D, E of the B. Let's drop that down to the correct degree. See where I'm going with this. And let's see, parallel trend channel. We would draw it like this. Snap it on the E, on the low of the A. So we're coming right into that lower trend channel support line. And also relationships here. So we have the length of A projected off of the E of the B. And I think we're right around near A versus C equality using that reference point. So yeah, we're right there. And then if we go to the 4-hour here again, what are we doing for an overall fib retracement here off the low for the NASDAQ? Just let me get that going. Again, coming right in around that 50% retracement. And looks like there was a nice gap close we just did today as well on the NASDAQ. So that's good. So you can see, the premise here. 5 up off the bottom. So far working a 3-wave correction of that initial 5. So the real opportunity here is an entry basically anywhere near current levels, or if you want to try and hold out for lower, if it's going to go lower. However you want to build your position, that's up to you. But the idea is that this low will hold from the 20th of May. We'll make a higher low. And then we will make a 5-wave move up and a higher high. Again, whether it's going to be a continuous trend eventually to new highs or just part of a larger corrective structure that's going to turn down again, don't know yet. But I think kind of from a, we'll call it from a swing trading perspective, I think it looks like a pretty good setup to try along here. Yeah, that's all I wanted to go through. Just wanted to do a reasonably quick update. Only around 8 minutes here, so SPX and NDX, those are my kind of 2 areas of focus on this kind of swing trading time frame. And I'm looking to get long here and catch a move up, and then reassess once we have more price action to the upside. And of course, if we do continue going down and do make lower lows, then something else is going on. And there is a way you can interpret this, that this is like an A, B, C expanded flat. So we did 5 up, but it was only C of an expanded flat correction, and then we're going to go down and make new lows. I'm not loving that interpretation, but obviously you'd be forced to adapt that interpretation if we do take out the lows, which I'm currently not anticipating is going to happen. But always willing to be surprised by the market, and it doesn't matter what I think. It can definitely make lower lows. It's just I don't currently think it's going to, given what the charts are suggesting at the moment. All right, well, that's good for now. Serial Trader signing off.